Hey guys, how's it going? I hope everyone is doing well. For those of you that lives in US, happy Labor Day. Hopefully you had a good long weekend. And for those of you that lives in Australia, happy Father's Day on Sunday. For all the dads out there, hopefully you also had the chance to spend time with your family. In today's video, I want to share with you one of my favorite strategy. And I use this strategy a lot, this setup a lot when the market is clearly trending. Okay, now I don't usually do this when the market is ranging or in very tight consolidation, but when it's really trending, this is one of my favorite setup. Okay, it's very easy, it is very straightforward as well. Now some of you may or may not know that I only trade New York AM session. Okay, I don't trade outside of these hours. Even though I live in Australia, I strictly only trade these 2 hours. Okay, when I said these 2 hours, I normally like to get into position or not between 8 a.m. right to 10 a.m. a New York session. Okay, so I don't if I don't actually find a setup outside, like within that 2 hours window, I just skip the day or skip the session altogether and then come back again the next day. All right, so the case study that I want to show you, right, is the Thursday 15th of August. Okay, and it says 1900 on the chart, but that's 1900 my time, okay, Western Australia time, but this actually 7 a.m. New York time. Now if on this chart, if it says 7 a.m., that means on the clock, right, at the time on Thursday 15th of August, at the time it was actually 8 o'clock, right, 8 a.m. So this is because we're looking at the 1 hourly chart. So what I do normally is I don't make a bias or anything. I don't actually make premature analysis. Even when London opens, I don't even actually make any judgment or any analysis as to where I think price is gonna go. So what I do, I actually wait until to the very last hour before New York opens, and I would actually mark the support and resistance at the time on the hourly time frame. So in this case, this will be my support and this will be my resistance. Okay, I will make it bigger for you so then you see here. Okay, so where is it? Okay, right, now everybody has a different way or style or perception or opinion about drawing support and resistance. Okay, some people likes to draw their support resistance as a line like so. Okay, some people like this, right? Some people likes to draw the line on the body or on the wicks. Okay, some people likes to draw an area like me, right, but not as big as large as mine. Okay, they like to draw the support and resistance quite slim like that, right? But for me, I draw my support and resistance to cover the entire wick. And how do I draw my support and resistance? Okay, so every time I see a bearish candle and then followed by a bullish candle in another time frame, in a much lower time frame, I see the price doing this, right? So I imagine if I actually go in the lower time frame, okay, so if we're looking at this candle here, this bearish candle, this 6 o'clock candle, price will be moving like so, right? And then when price actually hit this, right, price goes above it, right, and then wicks down, okay, and quickly shot up, okay, shot all the way up, okay, like so. All right, so this will represent the bullish candle and this represent the bearish candle. So as soon as price make a bullish candle after a bearish candle, I already consider it as a support in another time frame, obviously lower. Okay, so vice versa, if I see price printing bullish candle like this one, okay, like this one, right, price making low, okay, right, okay, so and then it stops here, all right, and then it goes higher and then snap. All right, so this, right, to me is resistance. Why? Because price actually stopped at that So price couldn't actually close above the bullish candle. All right, so that means there was a rejection there. Okay, so that is a resistance. Okay, price could not go above this. Right now, why didn't actually draw this resistance? Because for me, it price already broke this resistance anyway. So there are two resistance here, right? We have this resistance over here, and we have the first resistance here, and we have the second resistance over there. Okay. However, the 7 AM candle has already broken and closed above these two resistance. So yeah, it doesn't really matter for me if I actually draw this resistance or not. This one is actually not relevant anymore. Why? Because price has already even broken resistance even above it. Okay, so that was not my concern anymore. I know that price really willing to move up or to continue higher. Okay. So like I said, different people have different ways of drawing support and resistance, but you just follow me, just understand me for a little bit, just follow me for a while. Okay, and this is just the way I draw my support and resistance. I'm not saying it is actually the most correct way of drawing the support and resistance. However, what I can tell you is this: for my strategy, this is for me the best way to draw the support and resistance. So specifically to my strategy, okay, my strategy, I'm not talking, I cannot speak on behalf of every single strategy out there. My strategy that I've tested and developed, okay, that I've traded with real money as well, like a live account. With this strategy, I found that drawing this support and resistance this way is the best way so far to validate or to invalidate my strategy, okay, my setup. All right, now what do I mean by validate or invalidate? If I actually draw a resistance all the way to the wick and price, okay, this bullish candle actually closes within the zone, right, within this resistance, I cannot call that resistance broken. Okay, I cannot say that price has already broken the resistance. That means price has not broken the resistance. But if price actually has gone above and beyond this area, okay, that means it's already closing above the close of the previous candle, and also already closed above the previous highs, right, in this case this one and this one. That means officially price has already broken that resistance. Okay, now so what do I do after this? What I do is I go to the 5-minute chart. All right, so come 8 o'clock, I will actually go to the 5-minute chart. Right now, before I enter, right, I always look to the left, because now I know that I want to be a buyer, right, in this case. Right, I'll look at the left, right, I'll look to the left. Right, okay, is there I call it roadblock. So once you are in a position, or you are about to get into a position, you have to look to your left. You have to make sure that to your left there's not many roadblocks. Roadblocks means like other, like small or weak or strong resistance on a 5-minute that may slow your the movement of price, right, to your favor. Okay, so in this case, I think. Right, this would be the first one, and I call this, right, the clean traffic, and this will be another hot. Okay, right, so hang on, that's not, I'll just call it TP, just make it easier. Right, okay, basically if I take you back to the entry, all right, now I put down here clean traffic. I don't know whether you can see it. Okay, so clean traffic means that I'm only interested, even though I've already decided I want to be a buyer, that I want to an external breakout play is the setup that I want to execute. I have to wait on the 5-minute until price actually breaks this clean traffic line, right, this green line. Okay, why? Because I don't want to risk price, right, hitting this so-called 5-minute resistance and turn around and go back inside the range. Okay, although it's very unlikely, but I just want to be sure. Okay, and for me, this here, right, the smart money people will call it imbalance, fair value gap, or whatever you call it. I just call it it's a clean traffic area, okay, where there's not much resistance. Okay, the next resistance is here, and I put down TP or take profit. That's where I actually want to get at. All right, now if price wants to continue from here on in, right, for me that's a refinement. Okay, but that's actually not the base of the strategy. The base of strategy is basically to get into a movement, right, a quick movement, a scalp movement from one resistance to the next resistance if you're buying, obviously. Okay, so we know that on a 1 hourly chart, the 1 hour chart, the 1 hour resistance has been broken. So we've already ticked that box off. Okay, and before we get into a position, we wanna be double sure that there's nothing on the 5 minutes that could actually kick us back into the 1 hourly range, right, for a fake breakout. All right, so if we play this out, okay, nothing, right, we haven't actually got into position right now. So this, right, for me is a confirmation that, okay, price, number one, price has already on the 1 hourly closed above this 1 hour resistance. Okay, that's the number one criteria. The second criteria, we know we've already identified there is a 5 minutes roadblock or 5 minutes resistance between price to the next target. That has already been broken as well, because look at this. This is actually such a nice strong bullish candle with conviction, right? So what I do is, once I see price breaks that resistance, I would put my entry here, right, on the close of that candle, right? It has to be on the close of that candle, and I would look for the next support. All right, now sometimes you have a closer support to price, but it's weaker than a support that's actually slightly further than from price. But when I saw this, this is I consider this as a support here, as you know, before in my explanation on how I actually see support and resistance. A bearish candle followed by a bullish candle, I call that a support. A bearish candle followed by a bullish candle, I call that a support as well on the 5 minutes. So between this one and this one, I don't see any difference in strength. Okay, I see very strong support if price actually does this. Okay, right, and then continue up. All right, oops, what did I do there? Right, so for me, this is a support, and this is also a support. Okay, this is a support, and this is also a support. And if you were to ask me which one is stronger, I always say that this one is stronger, right, compared to this one, because that price has been tested several times here, but it just refused to let price continue lower. Whereas this one, it has only been tested once. But in this case, between this one and this one, I don't see any much difference or in terms of strength. So I took a slightly riskier approach, which is closer to price, but that's fine because I don't see any reason for keeping it safer but then lowering my risk to reward as well, unless what I'm willing to do is, if this is actually much stronger, say it's tested like 5, 6, 7, 8 times, right, this one, I'm actually willing to lower my risk to reward over that. But if it's the same, then there's no point, right? I'm still risking in terms of strength, though in my eyes and in my head, I see this as a similar strength between this support and that support. So I use this one as a support. Okay, then I target the next one. All right, and why this is my TP? I just want to recap. Where was it? All right, now this is a hard roadblocks, okay, a hard 5 minutes resistance, a strong 5 minutes resistance. So I don't want to bet my money that price is gonna continue moving higher. All right, US30 is very volatile, so you could be right in the direction, but it's because it's super volatile, it could take you out and then continue to your TP and beyond. Okay, and again, there's nothing wrong by keeping your winners run as well. I'm okay, just a disclaimer, I'm not saying for to you that you need to actually cut your trade short. I'm not saying that at all. I'm saying I'm sharing with you the base of my external breakout play or external breakout strategy. Anything that you do or that I do beyond this is called the refinement. Okay, this is but the base is this, or this is just really the basic of everything else. Okay, you could tweak it, fine tune it to because everyone has a different risk appetite. Everyone has a different. So here's the interesting part. For me, if I'm actually in a massive drawdown, what I want to do is I want to actually just hit the singles to make sure that I get, you know, a blue day, right? Meaning that I get profit, I get the winners to crawl my way up from a drawdown. But let's say, for example, I'm already like 10-12% up from my capital. Sure, you can be a little bit more riskier. You could actually take say 50% off and then take let the 50% as a runner. But if you are, say for example, you're in the drawdown, you've been losing for the past say 2-3 weeks, surely, you know, you want to be smart about it. And this is what I'm saying, that you can't, I don't think there's any, you can't have one size fit all, right? Even if I have a certain risk appetite, I believe that I need to be flexible with my risk depending on the balance of my account, right? If I, like I said, if I'm actually in a drawdown, surely my priority would be to crawl my way out of the drawdown area, right? So I don't want to actually be risking my winners over some, you know, bigger winners. I just want to crawl myself out from that drawdown. But if I'm already ahead, then sure, of course, you know, you could, and you've been on a winning streak, of course you can, you know, you've been winning for the past 2 weeks, you know, you can say, and then you see everything else sort of like align, you know, the high time frame is really bullish, you know, the daily, the 4 hour, the 1 hour, you have the fundamental supporting you, so you have that catalyst. Sure, you can take 50% out and after you let the rest run. Sure, of course you can do that. There's no right and wrong in this, right? Sorry. Okay, so in this case, okay, right, so there was a news here, right? I knew this. Okay, I took this trade. This is what I was aiming, but because of the slippage to my advantage, the price didn't actually close, I think, until like 2 point something percent or so. So it was good. It was lucky in terms of where it actually closes, but I was actually aiming for this as well. I was happy if I actually got this as my TP, right? But anyway, luck was on my side at the time, right? It was bearish for a while and it went sideways, right? For I think for a week and a half, if I'm not mistaken. Yeah, so it was a week, sorry, just over a week, right? And it started pushing up again, all right? And yeah, so hopefully you understand the whole thought process of why I wanted to take a external breakout play. External breakout plays mean that it's actually a breakout outside of the range. And then once you've confirmed that with the 1 hour chart, you then have to confirm again to your left that there's no hard roadblocks or strong 5 minutes resistance if you're going long. And then you wait for either New York open volumes or NYSE open volumes, right? For me, 8:30. I know 8 o'clock is when New York opens, but I know 8:30. Usually there's that surge between 8:30 to 8:45. There's 8:15 to 8:45. There's that surge of you know, to a certain direction. And then you have the NYSE again, New York Stock Exchange volume, which is a lot more. I would probably say easy, like double, triple the New York Open itself, and then to push you to the right direction. All right, guys. Hopefully you enjoyed it. Drop comments or ask any questions down below, and I'll try my best to answer all of them. Thanks for watching, guys.